So, you want a bigger tax refund in 2026? Maybe you got $2,000 last year and you're thinking, how do I turn that into $5,000 or even $10,000? Well, I'm going to show you exactly how to maximize your tax refund legally. But here's the twist. By the end of this video, you might realize that chasing a bigger refund is actually the worst financial decision you could make. But stick with me, because whether you want that fat refund check or you want to actually build wealth, I've got you covered. Let's get into it. All right, first things first, let's talk about how to actually get a bigger tax refund, because that's what you searched for, and I'm going to deliver. There are legitimate ways to increase the amount of money the IRS sends back to you, and most people are leaving thousands of dollars on the table because they don't know these strategies exist. Strategy number 1. Maximize your tax deductions. This is the big one. Most people take the standard deduction, which for 2026 is around $14,600 for single filers and about $29,200 for married couples filing jointly. But here's what most people don't realize. If your itemized deductions add up to more than the standard deduction, you could be getting way more money back. So, what can you itemize? Mortgage interest if you own a home. This is huge for homeowners. If you're paying $15,000 a year in mortgage interest, that's $15,000 you can deduct from your taxable income. State and local taxes. You can deduct up to $10,000. Medical expenses that exceed 7.5% of your income. So if you made $50,000 and you had $5,000 in medical bills, anything over $3,750 is deductible. Charitable donations, and this is a big one that people forget. If you donated clothes to Goodwill, gave money to your church, contributed to a nonprofit, you can deduct that. Keep your receipts. That $500 in donations throughout the year could mean an extra $100 or more back in your pocket. Student loan interest is another deduction people miss. You can deduct up to $2,500 in student loan interest you paid during the year. Your loan servicer will send you a 1098-E form. Don't leave that money on the table. Educator expenses. If you're a teacher and you spent your own money on classroom supplies, you can deduct up to $300. Home office deduction for self-employed people, you can deduct $5 per square foot up to 300 square feet. That's potentially $1,500 right there. Strategy number 2, contribute to retirement accounts. This is where it gets really interesting. If you contribute to a traditional IRA or a 401k, that money comes out of your taxable income. So let's say you made $60,000 this year and you put $6,000 into a traditional IRA. Now the IRS only taxes you on $54,000. Depending on your tax bracket, that could mean $1,000 to $1,500 more in your refund. And here's the beautiful part. You have until April 15th, 2026 to make IRA contributions that count for the 2025 tax year. So even if you're filing your taxes in February, you can still throw money into an IRA before the deadline and increase your refund. Health savings accounts, HSAs, work the same way. If you have a high deductible health plan, you can contribute to an HSA and reduce your taxable income. For 2026, you can put in up to $4,370 if you're single, or $8,550 for a family. The money grows tax-free and comes out tax-free if you use it for medical expenses. It's one of the best tax shelters that exists. Strategy number 3. Claim all your credits. Here's the difference. Deductions reduce your taxable income, but credits reduce your tax bill dollar for dollar, which means bigger refunds. Credits are way more powerful. The Earned Income Tax Credit, EITC, is massive for lower to moderate income earners. If you made under $63,000 and you have kids, you could get back $7,000 or more just from this credit alone. A lot of people don't claim it because they don't know it exists. The Child Tax Credit is another big one. Up to $2,000 per kid under 17. If you have 3 kids, that's $6,000 potentially coming back to you. The Child and Dependent Care Credit is for daycare and after-school care expenses. You can get back up to $3,000 for 1 kid or $6,000 for 2 or more. Education credits? The American Opportunity Credit gives you up to $2,500 per student for the first 4 years of college. The Lifetime Learning Credit is up to $2,000 per tax return for any level of education. If you or your kids are in school, these credits are sitting there waiting for you. Strategy number 4, adjust your withholding. If you want a massive refund, you can have your employer take out way more money from each paycheck than you actually owe. You fill out your W-4 form and you can claim 0 allowances or even request extra withholding. The IRS will hold on to that money all year long, and then in April, boom, fat refund check. This is what a lot of people do without even realizing it. Strategy number 5, don't miss income adjustments. There are above-the-line deductions that reduce your adjusted gross income. Educator expenses, student loan interest, HSA contributions, self-employment tax, IRA contributions. These all come off the top. The lower your AGI, the more credits you might qualify for. All right, so those are the legitimate ways to maximize your tax refund. If you implement all of this, claim every deduction, max out retirement contributions, itemize if it makes sense, claim your education credits, child tax credits, everything. But do it to lower your actual tax burden, not to create a fake savings account with the government. But here's where we need to have a real conversation. Getting a big tax refund feels amazing. That direct deposit hits your account, you see 4 or 5 figures, and it feels like you just won the lottery. But let me ask you this. Where was that money for the entire year? It was sitting in the government's bank account while you were living paycheck to paycheck, putting expenses on credit cards at 22% interest, stressing about bills. A tax refund isn't free money. It's not a bonus. It's your money that you overpaid throughout the year, and the government is giving it back to you with 0 interest. Think about that. If you got a $6,000 refund, that means you overpaid by $500 every single month. What could you have done with an extra $500 per month? You could have paid off high-interest debt. If you're carrying credit card debt at 20% interest and you're giving the government an interest-free loan, you're literally losing money. You could have invested it. $500 a month invested in an index fund averaging 8% annual returns, that's $91,000 over 10 years. Over 20 years, $275,000. But instead, you let the government hold it and gave you back exactly $6,000. You could have built an emergency fund so you're not living on the edge every month. You could have started a side business. You could have maxed out a Roth IRA throughout the year instead of scrambling at the last minute. Here's the real problem with big tax refunds. They create a poverty cycle. People count on that annual lump sum, they pre-spend it before it even arrives, then the refund comes, and what happens? They use it to catch up on bills, pay off maxed out credit cards, maybe take a vacation, buy a TV, and by summer, the money's gone and they're right back where they started, broke, in debt, waiting for next year's refund to save them again. Rich people don't get big refunds. You know why? Because they understand opportunity cost. They adjust their withholding so they owe a little bit or break even, and they take that extra money every month and put it to work. They invest it, they buy assets, they pay down debt strategically, they don't give the IRS free loans. The optimal tax situation is owing a small amount or getting a small refund, like under $500. That means your withholding was almost perfect. You kept your money throughout the year, you used it wisely, and you're settling up with the IRS without giving them a massive interest-free loan. So, here's exactly what you should do. Number 1, fix your W-4 right now. Go to your employer, fill out a new W-4, and adjust your withholding so you're keeping more money every month. The IRS has a withholding calculator on their website. Use it. Number 2, take that extra monthly money and automate your wealth building. Don't rely on discipline. Set up automatic transfers to a high-yield savings account for your emergency fund. Set up automatic investments into a Roth IRA or index funds. Set up automatic extra payments toward your highest interest debt. Make it automatic so the money goes to work before you can spend it. Number 3, still claim all your deductions and credits. Max out retirement contributions, itemize if it makes sense, claim your education credits, child tax credits, everything. But do it to lower your actual tax burden, not to create a fake savings account with the government. Here's the bottom line. The tax code is complicated, and yes, there are legal strategies to reduce what you owe and increase your refund. I just showed you how. But the real wealth-building move isn't chasing a bigger refund. It's understanding that a refund means you mismanaged your withholding. It's keeping your money throughout the year, putting it to work immediately, and letting compound interest build your wealth instead of giving the IRS a free loan. So, if you came here wanting to know how to get a bigger refund, now you know. Max your deductions, contribute to retirement accounts, claim every credit, adjust your withholding to overpay. But if you came here wanting to actually build wealth and escape the paycheck-to-paycheck cycle, you also know what to do. Fix your withholding, automate your investments, and stop celebrating when the government gives you back your own money with zero interest. Drop a comment. Refund check or monthly control?